Hello, Stephen Koukoulas here, Economist in residence with Zagga, and the economic update for the past month has been a curious one. It's been mixed news, I think it's fair to say, because we've got evidence that the economy is still very sluggish. The GDP numbers confirmed annual growth of only 1.3%, so about half of what we're used to and what we want to see in the economy. So that was a little bit disappointing. Some of the optimism that we saw at the end of last year or early this year on things like building approvals, on retail spending, have both faltered just in the last month or two. I think some of the negative shocks from the Trump tariff war are having an impact on consumer sentiment and business confidence, and that's having a negative effect on what was a more positive start to the year. But that said, the labour market's incredibly resilient. We've got confirmation that the unemployment rate's been hovering around 4%. It was 4.1% on the last reading, but jobs growth is still very strong. And the really good news that we can talk about is that inflation is well entrenched in the RBA's target range. So it came in at 2.4% for the headline inflation rate, 2.8% for this trimmed mean or underlying inflation rate. So when we consider that the RBA's target is 2.5%, I think it's fair to say they've hit their target. That's where the next instalment of really interesting news is coming up, because the money markets, the financial markets, are pricing in yet more rate cuts. We've had two already in this cycle. We had one in February, one in May. The current thinking is that we're going to get another 25 basis point rate cut in July, and that by late 2025 or early 2026, we'll have an official cash rate of around about 3%, which from today's level is about 3 or 4 25 basis point rate cuts over the next 9 to 12 months. So there's a bit more interest rate relief coming in, and that's the benefit, I suppose you could say, from inflation being very much under control. So the big issues going forward are what is happening in the world economy. Very, very hard to pinpoint the effect of the global trade tensions, the US and China sort of at each other's throats over the tariff war, and we're seeing some evidence of a weakening in the global economy, which has an impact on us here in Australia. But interest rate cuts will help support consumer spending, cash flows for the business sector. So there's reasons to be, again, cautiously optimistic. I don't think we're heading for a period of very strong economic growth, but there seems to be some sort of floor under the economy. We're not strong, but not bad either. It's that one that's hard to describe, a little bit Goldilocks. Not too hot, not too cold. We're not quite right yet, but the outlook is reasonably positive. We just need the Reserve Bank to deliver those rate cuts. So in summary, get set for more interest rate cuts. Just keep an eye on inflation. If it stays around 2.5%, we get important numbers in coming weeks, then no doubt the Reserve Bank will cut interest rates. They did consider a 50-point cut at its last meeting. They only delivered the 25, but it just goes to show they are worried about the impact of global economic conditions on Australia. I look forward to talking to you again at the next Zagga conference and the next Zagga get-together, but cautious optimism from a slightly disappointing kickoff to 2025. Thanks.